Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's January 29th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. You know, my days of living in northern Florida may be coming to an end. I've been here for 12 years now. I have to tell you, I thought I would get used to the culture, but I can't, especially in my neighborhood. When I grew up in Queens, New York, there were kids in the street playing all the time. Lived right next to this big park called Farmers Oval. Wasn't a lot of traffic on the streets because it was a dead end, but we played foot hockey, football, baseball, everything. I mean, every single sport you could think of, we played. And there were dozens of us, dozens of kids all hanging out. The parents were all on the same page. They saw your kid doing something wrong. They yelled at them. You didn't get in trouble for that back then. It's perfectly okay because they cared. My neighbors back then, all the family, we cared about each other. They hung out together. We all had each other's backs. My neighborhood in northern Florida, I have to say, my neighbors, and when I say, if I put a percentage on it, 90%, don't give a shit about you or your family. They don't talk to you. They're very mean. And I'm struggling to understand why they're so pissed off. And it's gotten worse as I've been here. It wasn't like that the first couple of years. There were a few kids in the neighborhood, not a lot of kids. There was a few. Now it's hardly any. I did have a few cool neighbors lived next to me, lived across the street. They all moved. And the holidays were cool. Now, Christmas time, I mean, you're lucky if you see just a few houses with decorations on them. Every Halloween. Hey, my neighborhood was the go-to neighborhood when I first moved there. I would say first 3-4 years. You just shut it down. A police car would come with his lights. Stopping cars would come into development. Of course, if you lived there, you'd be able to come in. My development house is about 125 homes. But the parents would sit outside on the lawns, have a few beers. The wives would take the kids around, and the husbands would take them around next. It was like 3-4 hours. You hung out. It was very social, a lot of fun. But the past few years, and the old people that run my neighborhood, who basically run my housing development, they now put up a sign right in front of the entrance. So when you go in, right in front of the entrance on Halloween, and it says kids could only trick or treat from 6 to 8 p.m. Think about how effed up that is just for a minute. The kids have one day every year to trick or treat. And you're going to put a limit on it? I mean, only 2 hours? If you don't want to participate, fine. Maybe you're older and you can't walk to the door every 5 minutes to hand out candy. I get it. But if that's the case, just shut your lights off and other kids will ring your bell. But to have a big sign that says only 2 hours? In the first few years I lived here, we were the go-to development. The whole town would come to our neighborhood for Halloween. Tons of kids from other neighborhoods. They would trick or treat, and it was awesome. They even set up cool haunted houses for the kids, and they put a lot of work into them. They were really, really cool. Like, they do it through their house, and they had this whole thing set up, different rooms. It was really cool. And now, over the past couple of years, hardly anyone trick or treats in our neighborhood. In fact, my wife and I, we drive a few miles to a friend's house, take our kids trick or treating in their neighborhoods. Because there's no kids around. There's nothing around. Half the people don't have their lights on. They don't care. But the 2 hours, it's just, I mean, so much more fun going someplace else. And I'm not ranting here trying to be funny and picking on Florida. I mean, this is really important. More important than earnings season, the coronavirus, the Grammys, the impeachment hearings, topics everyone's talking about this week. But bear with me because my frustration is beyond belief. And more important, I'm going to make a very strong point here. Because recently, when my neighbors, right, neighbors I don't like, they block my driveway almost every day with their cars. Now, keep in mind, I live in a development where it's against the rules to leave your car parked on the streets overnight, unless there's exceptions. You have a party or someone's over for the weekend, nobody cares. That's okay. I'm not talking about this. My neighbor that lives on the same side as me has 4 cars. They park one of their cars in front of my house almost every day for the past 2 to 3 months. And the tires on this car are actually on the grass. They're on the grass in my front lawn. So forget that it's difficult to see when we pulled out of the driveway, right? Because it's a narrow street, it's difficult, you're blocking off the street, but you're on my fucking grass. Are you kidding me? I mean, the guy across the street's even better. I think he's some kind of retired judge, miserable. And being a judge, it basically means a percentage of being smug, arrogant, asshole, extremely, extremely high, right? I mean, it's hard not to be if you're a retired judge or a judge in that matter, given that you've basically been telling everyone what to do your entire career, and none of those people have the right to talk back to you. Not a bad job for anyone who needs to boost their ego. Yes, it requires a lot of education, but you get my point. Here's a guy that parks his car across the street, also blocking my driveway. Now, this guy owns 2 cars, and we all have 2-car driveways in the neighborhood, every house. I have 2 cars, my wife's, myself. They're in our driveway. They're parked in our driveway. But this guy, no. 1 car is in his driveway, the other parked in the street, blocking my driveway. So when my wife and I pull out, we have to, we're backing out. I have to back out, go forward, back out, go forward to get out, which is insane. Now, the funny thing is, and I thought about this a lot, these people have no idea they're doing anything wrong. I mean, they're not being a-holes on purpose, which I could actually accept. I'm from New York. I get it. Sometimes you just don't like people. You got to do stupid. I get it. But they're just idiots. They don't understand that every street in my neighborhood, if you look anywhere, if you walk outside at night, you look to the right, you look to the left, you go down any single block, there's no cars anywhere at night parked on the street except in front of my house, and they're not even my freaking cars. But it's not just the people living next to me and across the street. I mean, almost everyone in my neighborhood is old and miserable. I mean, it's been going on for such a long time. I'll get home from hanging out with my family. We like to do things on the weekends. I get out of the car. My kids and wife get out of the car when we park in our driveway. And someone will be walking their dog across the street. And this is an isolated situation. This happens a lot. And the sidewalk's across the street. We don't have the sidewalk on our side of the street. It's across the street. So, someone will be walking their dog, just walking by. And I always do the polite thing. I wave and say, hey, how's it going? How you doing? And I'll wave. They look at me and don't wave back. They just keep walking. I mean, who doesn't wave back? Who doesn't wave back anywhere in the world? Who doesn't wave back when you wave to them? I mean, I could travel to Beirut. There could be a terrorist across the street. And if I wave, that terrorist is going to wave for me. It's universal. Everybody waves. Everybody always waves. Even if you don't like the person. If someone waves, you wave. It's just everywhere. Universal, any country, anywhere. They're going to wave back. My neighborhood? Nope. They won't wave back. Just turn the head and keep walking. And my kids see this and they're like, wow, why is everybody so mean here? And, I'm always honest with them and I tell them because there's a lot of a-holes in the neighborhood. And, I try to cover that up and don't curse, but, they're kind of, what? And, my daughters, they'll be what? A-holes, Dad? I'm like, no, don't say that. But they get the point. So I say, just ignore them. But I just don't get it. I mean, why do you hate the world for? Why are you so grumpy? And if you hate everything and you're mean to everybody, man, just jump off a bridge or something. I know that sounds terrible. Oh my God, tell me to commit suicide. It's just if you're that miserable, why share the misery with everybody else? I just don't know what the purpose is, being miserable and treating people mean all the time. And I'm not talking about sometimes this happens. This happens all the time. And maybe some of these people are living with chronic pain. Okay, you get a pass, but that's not these people. You know what pisses me off the most? And this is really important to understand. Very, very important to understand. Guys like me are in the prime of their career. I work my ass off. I love what I do. The only way we get smarter, the only ways we can learn is by talking to people who have experience, who went through ups and downs, lived through different cycles, when most young people today only know about one cycle, a straight up stock market, booming economy, assets going higher for the past 10 years. And guys, this kind of market never happened in our history this long. We will go into a recession. We will have massive pullbacks. That's normal. That's normal. But you get this experience by talking to people who've been through it. But if you're 60 or older, the knowledge you have, I can't read that in books. I can't. It doesn't capture the emotions, the real perspective that you have. I mean, the financial newsletter industry, our demographic is a 60-year-old person who has a nest egg, who is looking for new ideas to invest in, has a time to read several newsletters. So I know I'm talking to my core market right now. But if you're grumpy, you're pissed off, the easiest way to get rid of that anger, try mentoring someone. I mean, share that knowledge that you have. It doesn't matter what field you're in. It doesn't matter what race, gender, if you served our country. You all have knowledge to share that can help us. I mean, can you imagine the perspective you would get from a retired military vet that's been in dozens of hostile nations? And they come back and listen to Americans complain about traffic, post meaningless selfies of themselves. Hey, how you doing? All over social media, take for granted that you have access to water every day, every minute, or electricity, or opportunity to succeed if you work hard. I gotta tell you, guys like me, I'll sit and listen to you all day, and I've done that. I've done that with so many of you that have emailed in. FrankCurzioResearch.com. There's so many of you. You know exactly what I'm talking about. And for me, that's invaluable just to learn, to capture that. I mean, seriously, I read books. I read everything in the markets. I mean, I could teach you guys anything you want when it comes to research, anything. How to do the research, what stories are important, what metrics are important. I mean, you probably won't get a better perspective when it comes to stocks, individual stock picking than anyone in this industry. I can help you with that. At the end of the day, I'm only in the third year of running my own business. I'm not a genius. I'm going to make mistakes. And yet many of you have been through this whole entire cycle already, many times. I mean, starting your own company, learning through those ups and downs, learning from your mistakes that allowed you to retire comfortably. And those lessons I can learn from you are priceless. And again, I've reached out to so many of you for this. And it's cool. I love it. And that respect. So stop being grumpy. Stop being pissed off at the world. You're alive. And being alive is the greatest thing ever. Life's an exceptional thing. So many of us take for granted. Look at Kobe Bryant, his 13-year-old daughter, the helicopter crash. I mean, how quickly things can end. And when they do end, and it's going to happen to all of us, right? Death is inevitable. Who do you want to be? You're going to be that person who says, oh, shit, you know what? I wish I had more time to hang out with my family, my kids, my grandkids, just a little bit more. Wish I had time to travel to the place I wanted to go. Wish I to make amends with old friends you lost touch with over stupid, meaningless arguments. Are you going to be that person? I could be the one that says, man, you know what? I accomplished so much. I gave it all as a parent. I worked my ass off to provide a better life for my family, my clients, traveled the world, met so many amazing people, at so many great times, which most of the time that comes from being irresponsible. It's okay to be irresponsible, do stupid things. Those are the times you remember for the rest of your life. Believe me, you're not going to remember the big test you passed in college. No. Drinking and throwing up and not sleeping and going in there to take that test and barely paid. That's a cool story. That's what you remember. And for Kobe, and this hit me really, really hard. I mean, my life was basketball for pretty much every day before I got married. I mean, look at 25 years or so. That's all I did. It built my character, built everything. I went to a high school which was ranked #1 in the country, and I didn't make the team. You know, it could have failed, but I used it as motivation and just, it built my character, built me into the person I am today. I took this pretty hard. Well, look at Kobe. I mean, there was so much he wanted to do. Yes, for the game, for his family. But you know what? He was a guy that left everything out there. He accomplished almost everything possible in the NBA. League MVP, Finals MVP twice, 5 championships, even won an Oscar. Spent lots of time with his girls after he retired. Traveled the world to educate people about the game, about sportsmanship. Had the ups and downs, we know, just like all of us do. But always rose to the occasion. And what he accomplished in his 41 years is absolutely incredible. And while it's a sad week, day, whatever you want to call it, I mean, this tragedy, I can tell you what, Kobe looking down, at least he could look down and say, man, you know what? I lived. I never took a play off. Every minute counted. Spent time with my daughters, teaching them the game. And that's pretty cool to me. I just don't get why so many people in my neighborhood are so pissed off, so grumpy, so unfriendly. And you know what? I don't see any change coming. I thought I'd get used to it, to the culture. It would get better. Been there for 12 years now. It's actually getting worse, not better. I'm probably going to move, at least to another development, but maybe to another state pretty soon. And I promise I will keep you guys posted. Anyway. So much going on with the markets this week. There is earnings season. There is a coronavirus, which is affecting some sectors, which is real because it's not just, this is going to get better, which it will. Find cures, it'll be okay. But when you have places in China being shut down, it affects travel, it affects Macau, affects gambling. There's a lot of sectors that are going to get impacted. Earnings will get impacted. And you're seeing that. A lot of these names down 15, 20%. Got the impeachment hearings that still go on and on, whatever side you're on. It's just, crazy. But quietly, and this is pretty amazing, quietly, one asset class is outside stocks, S&P 500, has not only been holding up well, but it's in a steady uptrend. And the hedge fund managers finally talking about this asset class more than any time I could remember in the past 7, 8 years. This asset class is gold, which is now trading at a 6-year high. Which is not normal. I mean, that's not a normal pattern we see when the markets or other assets are trading near their all-time highs. And no one's really talking about it. It is gold, sector I covered for over a decade. Great contacts. A lot of money in this industry. About 15% of my net worth in gold mining-related assets. But to talk more about this trend, the price of gold, where it's heading, what stocks will benefit? Why is it different this time? I'm bringing in my buddy, Amir Adnani, who's a chairman and founder of GoldMining, a company that acquired 22 million indicated inferred ounces of gold over the past 7 years, using this downturn to build up a huge asset base in a depressed asset. Now, these acquisitions, which he's made, lots of them, cost GoldMining about $80 million. At the market's peak in 2011, these assets were worth over $880 million. Usually I would tell you to ignore that. Okay, doesn't matter what the valuations were. Intel just passed its 1999 to March 2000 valuation. It could take 20 years. So usually when people say that, I run away. But listen to this, because this is significant. Because gold was trading over $1,700 back then at its highs. We all know it went to as high as $1,900. It was there very briefly. But trade over $1,700 for a few months in 2011, hit those levels again, I think, in September 2012. But that's a key level, $1,700. Today, gold prices are trading close to $1,600 an ounce, right? Just $100 off of those, average highs back then. And when I look at a company like GoldMining, their market cap is under $200 million. And not the only company I'm seeing this with. I'm starting to do a lot of research, a lot of things, and finally seeing momentum. You want to see the momentum in this industry before you get back in. So don't worry about missing the last 30%, 40% move. It doesn't matter. These things are down 90%. They still need to go up 2x, 3x, 4x, 5x to get back to where they were trading. But trying to catch a falling knife has not been the way to go. Doesn't matter who your management team was. Doesn't matter if the Pope was on the board. Doesn't matter anything. Mining stocks have just gotten killed over the last 7 years. Now you got prices coming back. A lot of things favoring the industry right now. So Amir's going to break down his company, GoldMining, tell you about its growth initiatives, But guys, it's going to be a great, great interview. If you have any investments in gold or gold stocks, this is a must listen to. In my educational segment, it's that time of the year again where I give you the ultimate guaranteed recommendation. Relax. The SEC is listening. This is a joke. Kind of a joke, but anyway. This investment, which I share every single year, right at this time, has been dead on for 8 out of the past 9 years. I think some of you know where I'm going with this, if you follow me for a while. But for new listeners, please pay close attention to this segment, because not a lot of sure things in life, but this segment, this recommendation I'm going to share, is very, very close to being a sure thing. I'm going to break that down for you. It's going to be a lot of fun. And before I share all the educational segment, all the data, everything, and why my recommendation is almost guaranteed to work out, let's bring in GoldMining's founder and CEO, Amir Adnani. Amir Adnani, thanks so much for coming back on the podcast.
Hey, Frank, is it okay to say Happy New Year, or is it too late?
No, it's perfect timing. And although I think it's been a little while since you've been on this podcast, I was fortunate enough to see you not too long ago, about a week and a half, 2 weeks ago, which was a lot of fun at the Consumer Electronics Show. So what did you think about the show? Was that the first time you were there?
Yeah, it was the first time, and I think it was a wonderful opportunity. In fact, inspired by your defeat last year to that robot that beat you at ping pong. Do you remember that?
Yeah, and yes, I do, unfortunately. But yeah, it was great to catch up with you and in person and hang out, which is a lot of fun. And but a lot of people on this podcast haven't heard from me for a while, and we're going to talk a lot about gold and gold mining. So let's start with the macro picture, okay? Because 4 years ago, you and I, which we know each other for a while now, we thought gold prices and gold stocks would surge after Trump got elected. And I think there was tons of people that believe that as well. And we were all wrong. Now, given the strong possibility of Trump getting reelected, and, forget about politics, put our differences aside, it's very hard to unseat a president when the economy is doing this good. It could happen, of course, but most likely it's not going to happen, at least right now. So if Trump gets reelected, do you think this could create another long-term headwind for gold again?
Before we talk about Trump, why don't we just talk about the 3 words that could be just absolutely bullish for the gold price, right? And those 3 words are President Elizabeth Warren. And this is interesting to look at, Frank, because you and I both thought, and maybe the market thought to some extent in 2016, that if Trump became president, it would be terrible for the economy and it'd be very good for gold. And who would have thought today we all would think that he'd be the best thing for the economy, and that the Democratic ticket and the nominees look like they would be the worst thing for the economy. But anyways, that aside, I think we also have the fact that today in the White House, you have a president who's actually fascinated by negative yielding bonds. And he's wondering, that sounds pretty good. As a businessman and former developer, he gets how interesting those could be. And that to me is the bigger sort of theme that we need to think about, that regardless of who wins the election later this year, we have this unprecedented phenomena in the world that started really to take momentum this year, where we got as high as $17 trillion in the world in terms of bonds globally that were negative yielding. The numbers come down a bit, but still, I believe the latest estimate is somewhere around 10 or 11 trillion dollars of bonds globally that are negative yielding. This is sort of economic insanity. This idea that you give out a loan and get less back in return. And it really emphasizes the need and why we're seeing central banks globally kind of pursue this concept of de-dollarization. And central banks have been net buyers of gold for 10 consecutive years. And Asian central banks still have very low gold holdings, which basically means that countries like China could continue to switch out of treasury holdings and into gold. And so while I think events like the U.S. presidential election coming up and geopolitical events like what we had in terms of craziness in the Middle East and the issues between U.S. and Iran just a few weeks ago, while those things can certainly create volatility in the gold price, I think we have some more fundamental underpinning that is driving the gold price higher, and that's gold's main relationship with basically real interest rates and adjusted for inflation. And when you look at that, if we continue to head into this negative yield world, this is going to be a very positive backdrop for a long time to come for a stronger gold price.
Now, Amir, mining is your life. You're in the central hub of the mining world in Vancouver. So when being on the outside, I'm seeing more hedge fund and major hedge funds talk about gold and the importance of it more today than I've seen pretty much in the last 6, 7, 8 years at least. Are you seeing that on your end, or is that a big deal to you? Because for us, it seems like that nervousness and these are guys that manage hundreds of billions of dollars. You're usually not seeing them talk about gold, especially with stock prices, most assets going, sky high, a lot higher. Seems like, the factors are still in place for that to happen, at least through the election. But I've never seen so many of these big hedge fund managers and very importantly talking about why you should have some kind of allocation to gold. I don't know if you're seeing that as well on your end, or is that a big deal to you guys?
Well, it certainly is a big deal. But having said that, I would agree with you that while you see, let's say, a Ray Dalio come out and talk about gold and be bullish gold, and you're seeing some really big names on the investment side talking about gold and the importance of gold as hedge or insurance in portfolios at a time when, again, the markets are at a new all-time high, it seems, every day. What we haven't seen yet, Frank, in a big way is that translating that interest and that investment interest in gold translating to investments flowing in a big way into junior mining stocks or junior gold stocks. I think you're seeing the bigger, large cap, very liquid names receive some of the attention, but I think this is also very normal. Royal Bank of Canada just a few months ago had a report discussing this, saying that, look, in the very early innings of a developing recovery in the gold market and at the beginning of a bull market, you see capital initially get allocated to physical gold ETFs. Then you see the large cap names with much greater trading volume on a day-to-day basis. Then they start to catch a bid. We've seen this interest in royalty and streaming gold companies that actually trade at the highest price to NAV multiples in the sector right now. And then it starts to trickle down to the mid-sized companies and then the small caps. And frankly, historically, the biggest gains are always when the small caps move, because the small caps are typically when you have the 10 baggers. And in the large caps, you get your kind of doubles and kind of things like that. But these are bigger companies. But what's super exciting, and you and I have seen it in the past, is when the junior sector starts to go. And I don't think that has happened yet. And frankly, you're too close to all of this to probably have access to guys like me to get on your podcast and talk about this. But I think the general market, talking heads on CNBC, they're still talking about the Dow Jones and the S&P and all those, frankly, really exciting companies that have done very, very well. But gold and gold stocks, I don't think are really part of the discussion or narrative yet.
You bring up junior miners, and let's stay on that topic, because when we see this move in gold, royalty companies, streaming companies have been doing great, majors have been doing great. But there's two important factors I look at when it comes specifically to juniors, right? Because most juniors, and I think you admit this as well, is they're not looking to develop that resource into actual production. Most, they're looking to get acquired. And the majors do the acquiring, which is a huge problem from 2013, 2018, because these companies were so leveraged. Some of them almost went under. Now they're in much better shape. Biggest players merged. They cut costs. But they're in positions to buy. And there's two factors that I look at here that are important. And I want you to get your perspective on it, because when I look at the gold reserves by the majors and how much it is down, right, to replenish those reserves, guys, you have to replenish those reserves. And also the amount of major discoveries. We've seen tons in the 2000s, the last 7 years. And when I say major discoveries, I'm looking at over 1 million ounce discoveries. Very, very few, at least over the last 7 years. Could you talk about why that's so important, especially to the juniors?
It's an important trend, and it's probably one of the biggest trends that's the side effect of basically close to a 7-year bear market that we had in the gold sector that started around 2013. And during this period where you had a prolonged bear market, major gold producers basically were focused on deleveraging their balance sheets, so paying down debt, and they had to squeeze margins to make that happen. And one of the first things that they did was to cut out spending in exploration and development, which is how you make discoveries, which is how you replenish the mines that you're depleting, because mining is naturally an exercise where on a day-to-day and year-to-year basis you're mining, you're depleting an ore body or resources, and you got to replace them. The only way to replace them is with more drilling, more exploration, and that type of work, that exploration development work, was minimized. It just completely vanished in the last 7 years. And so here we are entering kind of this new bull market for gold, where the gold price is over $1,500, and that's the first time in about 7 years. And so there's this meaningful inflection point that's taken place. And maybe the balance sheets of the major gold producers looks much better after 7 years of deleveraging, but the pipeline of future growth, which is resources or reserves in the ground, have declined by 42% since 2012, and they're actually at a decade low. And that creates a fascinating situation for junior companies, because just like in biotech, right? In biotech, you have the biotech companies that do all the R&D, the research and development, and then the majors that are out there doing what the majors do. But at some point, they have to acquire the juniors, because that's where the future pipeline is. That's where the future drugs are. Well, that's where the future kind of deposits are that need to be developed. By the way, there's really meaningful parallels between how biotech industry works and research and development in that sector and junior resources and junior mining. And this is interesting for your listeners that may not be familiar with junior mining but are familiar with biotech. And those parallels are so true. And so, imagine if for the last decade, no one had done any research and development and for new drugs or for new drug delivery platforms or things of that nature, right? And all of a sudden there was a new era or a new market environment that called for it. So this to me is one of the most singular important issues or trends, and one of the reasons to be excited about sort of the prospects for junior resource, junior gold, junior mining in the years to come, as greater interest from investors comes into these companies. They become better valued and better positioned for and become potential targets for larger gold companies that are going to then be focused on addressing their resources and reserves being at a decade low.
Okay, now let's switch tunes now that we talked about macro, which is important, guys. You need to understand the gold markets, right? Because we know if gold doesn't do well, we've seen it. Doesn't matter who's on your board, what kind of company you have. Chances when you don't have a sector doing well, everything falls. Some is going to fall more than others. But now we're seeing gold rise, and you made the case that I think most of us really believe, especially me, that this trend is going to continue. There's definitely tailwinds behind it, negative interest rates, dollar. I see a lot of positives, even not so much coronavirus, but still people are worried that, they're going to need a safe haven. I think gold's going to continue to do well the next few years. Let's get into gold mining. So I remember gold mining when it was Brazil Resources. That's how long I know you for, meeting in New York City, 2012, maybe 2011, but being one of the first to cover this name and see what you have done. And when you came to me, you said, listen, this is what we're going to do. It's a depressed market. We see these cycles all the time. Not all the time, but over the last 30 years we've seen. And we want to acquire these assets when they're dirt cheap, which you did. I think what everyone didn't anticipate is that the market would be depressed for this long. But now you're sitting on a massive asset base. Talk about gold mining to someone, I have a lot of long-term listeners, long-term subscribers, but people who are listening for the first time. Talk a little bit about your company, the idea, your assets, because the pretty is incredible with what you built here and the position you're in right now, especially if gold continues this run higher.
If we step back and look at sort of what our thinking has been and what our business strategy has been, we observe a few things. We observed about the fact that the mining business is a very cyclical business, and that in the junior mining business, there are different strategies or ways by which you can position a company, whether you're just focused on grassroots exploration, which is a very high risk, high reward kind of business, or you have a single property that you want to just advance towards feasibility, and or you can kind of create an optionality business model. And what that means, and it's happened very successfully in other commodities over the last 30 years. In silver, there was a company called Silver Standard in the early 90s that was acquiring previously explored silver properties and just amalgamating a number of these. And today that company is a multi-billion-dollar silver producer and precious metal producer, and spun out other companies out of that, like Pretium, that's become a high-grade gold producer. But its foundation was very much doing what our company, GoldMining, has done over the last 8 years of a bear market in gold, except we've done it in gold what Silver Standard did in silver, or a very famous mining entrepreneur, Ross Speedy, did with copper in early 2000 when copper was less than $1 a pound, buying copper resources in the ground, putting together a big portfolio, and as copper prices rally, you basically sell every asset to a different buyer. And I think in their case, they turned $100 million worth of acquisitions into a $1.4 billion exit when it was all said and done. And so for this kind of strategy to work, you need a prolonged bear market in a commodity of interest. So in our case, we got the timing right. We started our company in 2010. We IPO'd in 2011. We sat there patiently for about a year from our 2011 IPO, made our first acquisition in 2012, and since 2012 have made numerous acquisitions, as recent as a month ago, that gives us the largest gold resource portfolio of any pre-production company listed in America. Multi-jurisdictional. We're in 5 different countries, and so to get this strategy right, in my opinion, again, takes a prolonged bear market. So we just had that in gold since 2013. We had a 7-year bear market. You got to be able to get a backing from investors that have patience, that understand and have played this business model before, so they kind of understand how it works. And we had that. Like, one of the early backers of both Silver Standard and Lumina Copper was Rick Rule with Sprott Asset Management, or guys like our mutual friend Marin Katusa, and guys like Doug Casey. These were some of the earliest investors, and still to this day, current and largest investors in our company, that had made money on this type of business strategy, had seen it happen in other commodities. And so you get the right backers, you get a nice prolonged period, and you patiently acquire assets during this period, and you sit tight until there's a re-rating in the commodity and we come into an upswing for that commodity. And so in this case, this is really an exciting time for me, because I've spent, again, close to a decade of my life building this company. You've been there really since the beginning as someone who recognized it early on, and have followed it along the way as well. Some of the partners we had in the deal, Frank, as you know, were absolutely foundational and instrumental to this whole thing, like Mario Garnero and Brazil Invest, who have backed us from day one. And Mario is one of the most kind of famous investors and entrepreneurs in Brazil and South America. So the fact that we acquired projects in Brazil, Colombia, and Peru with a very notable and strategic backer investor in South America definitely gave us the right footing there. But at the same time, expanding our portfolio into the U.S., into Canada. And so today we have about 10.5 million ounces of measured and indicated gold resources and 12.4 million ounces of inferred gold resources. And it's in 5 different countries, and it's very diverse. And what I think you got to remember, I'll give you one example, because this is around the time you and I were talking, summer of 2015. This is an example for a listener to understand how contrarian you have to be to execute on this kind of strategy. Summer of 2015, we acquired the Whistler property in Alaska. And I think we paid at the time about $1.6 million for what was, at a point in time in 2010, at a higher gold price, that was a $150 million market cap company. 170 square kilometer property. in 2015, I don't think you could have bought a home in Vancouver, where I'm based out of, for $1.6 million. I remember thinking about that. I was like, we have this incredibly overvalued real estate market. You can't buy anything for less than $2 million. Geez. And here we're buying a 170 square kilometer property with gold resources that have been drilled out for $1.6 million. And gold was at $1,050 an ounce. And people thought it's going to $900. So that's just one example, but it's a good example to demonstrate what we've been through and where the gold price has been and how extreme the valuations get in our business, where the same asset can be valued at a couple of $1 million at $1,000 gold, and at $1,700 gold could be valued at $150 million. And those are the swings we see in commodities. That's the cyclicality of commodities. And that's why it really is a feast or famine kind of sector to the extreme. But maybe I'll stop there and kind of see how you want to drill into it. But that, in a nutshell, is the business that we have and we've created. And today our company, for the first time, is seeing the gold price, forget about over $1,500, but over $1,300. For most of our life as a company, gold was less than $1,300 an ounce. And so it's quite interesting to be in a position today where we can say, we've spent $80 million acquiring companies and projects that had close to $1 billion of combined market cap in the last bull market cycle for gold. And so this has been a classic case of making acquisitions for 10 cents on the dollar.
Yeah, no, great stuff there. And it's explaining your company, you can't do it in 5 minutes. You have to go over the properties, how it all came together, and it's amazing. And I will say this. When you go through ups and downs in the markets, it's fascinating, especially when you have the times where it's just, the cycle's not in your favor, but you learn more during those times compared to during the bullish cycles when you're spending, you're being more aggressive. And to see what you did with the company to the point where you kept spending on the wrap, so you have a strong balance sheet, you still have high insider ownership. Let me ask you this last question here. What are your plans going forward? Because are you looking to acquire more where they're probably a little bit more expensive than they were? Is it more difficult? Because it seems like, that might be a strategy a lot of companies are looking to do, especially the majors who have much better balance sheets today. Or is it maybe, hey, we want to extend out these properties. Maybe there's more gold listed on these properties. What's the plan right now? Because I know in this market, the wait and see approach, or just hold on and wait, is almost seen as a negative, right? People hate that. I mean, if there's no catalyst, especially in the markets, outside of mining that I cover, if there's no news on the stock for 3-4 months, people just sell it. They don't care. They're like, okay, we'll come back later. I mean, everything's so real time today, especially with social media. So what are some of the plans that investors can look forward to, especially over the next, quarter to maybe 2 or 3 quarters?
Well, I mean, you have a situation where we have done a tremendous amount of work, and I think today when we look at our valuation compared to even 2016, in 2016 we had a gold price that maxed out at 1,350, but yet the gold stocks were 2 to 3 times higher than they are today. There was a stronger bull market for equities then than there is now. Today, if you just compare our company, I think you recall in 2016, we were the best performing gold stocks that year. I think we were up 400% compared to GDXJ that was up 180%, which truly speaks to the leverage and optionality that we have to a rising gold price. But back then we had less than half of the total gold resources that we have today. And our valuation was 3 times higher. So I think first and foremost, we plan to be very aggressive in the first half of this year to raise awareness about our company and our fundamental value. And frankly, we're getting more attention and interest from institutions that are inviting us out to meet with them, talk to them. There really is growing interest in gold. So I think we're going to do just a more aggressive job raising awareness about the company. And that hopefully will lead to also our ability to execute on more acquisitions, because I still think that there's a window right now where we can get more deals done. We just announced a deal last month on a project called Yerra Molito in Colombia. By the way, we've been acquiring projects in Colombia's central Mid-Cocoa Belt for the last 3 years, And how rewarding was it last month to see the Chinese company Zijin Mining come and pay $1.4 billion in cash for a company that's just 40 kilometers north of where we are in the same geologic area and belt that we've believed for 3 years was a great place for us to consolidate assets. And so there's, I think, growing interest, and you see more deals like this happen. And so part of our story will be about delivering on more resources. This latest acquisition in Colombia, we haven't put out the resource report on it yet. There was drilling done there, and we expect to have that news out. We expect to have news on more acquisitions, and to also demonstrate that the portfolio that we have of this size in a rising gold market environment can start to attract attention from bigger companies that are looking to invest in growth, looking to invest in projects that can then become part of their future production profile. So I would expect that this would be definitely a very busy year for us, an active year with news and activity and new attention from investors that are underweight gold, that haven't paid attention to gold all these years, and now believe that the move in the gold price is generating enough interest to start to pay attention to the different ways that you can play the sector.
Yeah, it definitely makes sense. And listen, Amir, I love when you come on. I mean, we get so in depth on so many different industries. It's really cool to talk about gold. Sometimes we talk about uranium or different mining markets, but really great stuff on your perspective on not just from the macro, but also on gold mining and your plans and what you guys are doing. So I really appreciate it. I guess my last question to you is, and I'm hoping that you'll do this, could you cite the beginning of my show like you do every time you see me?
Hey, it's Frank Curzio. How's it going out there?
There's this long-standing joke. I know Amir for a long time. Every time, without a doubt, when I see him, like, "Hey, how's it going?" He goes, "Hey, how's it going?" And everybody laughs. So it's how long that we know each other.
Hey, Frank, did you end up beating the robot at ping pong this year, or what?
I did much better, but they could really put it up a notch where it's a professional. So I did much better. I got points off of him, but it was yeah, he was being nice to me because he knew I was doing interviews and I was taping everything. So, they put it down to a level that was kind of like, not professional, but yeah. So the answer is yes, but you have to put a little asterisk next to that. I probably wouldn't beat it. I wouldn't come close to beating it if it did the little spins and everything like that. So it was a lot of fun, man. And it was good to have you there too.
It was a lot of fun. And well, listen, I appreciate you having me back on. And I have a feeling that you'll be talking about gold more and more over the course of this year on your podcast. There's real life here in this commodity, and we'll see how it plays out. I can only imagine that this is going to be another good year for gold, because let's not forget that last year wasn't so bad either, right? Gold price did very well last year, so it's hopefully an area that your listeners are more interested in, and we can continue to share good information with them.
Yeah, that sounds great, bud. Well, listen, thanks for coming on. I'll see you soon. Love when you come on. I really appreciate it. I know how busy you are. And yeah, I'll talk to you real soon, buddy. Thanks.
Okay, thank you. Bye.
Okay, guys, great stuff from Amir. He's one of the great people in the mining industry. Someone, he's a good friend, asks about my mom all the time, texts me to see how I'm doing. It's just, he always doing the right thing. And, his hard work's going to pay off. I mean, we followed this stock for a while. I mean, I've been in this stock 2012, 13 around. Early investors did fantastic. We recommended another 2 times thinking, wow, this sell-off has to be done. And we stopped out a few times, which, so I lost a little bit of my subscribers, which I wasn't happy with. So this time I was very careful saying, okay, if we're going to get back into a lot of these names, we want to make sure this trend is there. I thought it was there. There was a lot of head fakes, 2016, even in 2018. But there's something much bigger going on here in gold, where there's a bid there. There's more interest there. You're seeing a market where people are starting to get a little nervous and saying, okay, it's getting a little frothy. How much higher can we go? And of course, we could go higher. A lot of us didn't think it was going to go higher, the markets over the past 2 years, but they're still doing amazing. And, people really don't care about gold when you can make 30% on Amazon or Microsoft in a month, but times are changing. Time's definitely changing. So I'm going to try to find some really good names for you. I'm going to try to get the best people in this industry on, people that I trust, people that I've dealt with before, people who've never screwed anybody over, because the mining industry is very dangerous, guys. Out of all the industries I cover, this is the biggest scam industry in the world by far. More than marijuana, more than crypto. I'm not kidding. I mean, people will take your money in this and they don't care. So you have to be very, very careful. I've been fortunate enough to attach myself to the right people, guide me in the right directions, have the best contacts in this industry. Rick Rule, Mara Katusa, Amir, Jeff Phillips, and with this industry getting a bid, and these guys have called me for the past couple of years. What do you think of this? I'm like, I don't want to do anything gold, silver. It's not working, and everything else we're doing is working. And our performance has been great, but now you're seeing gold catch a bid. You're seeing some momentum behind these names. And I want to try to get some more people in front of you, because last thing I want to do is recommend a couple of these gold stocks. We do have one silver recommendation that's doing pretty good in Curzio Venture Opportunities, but you're going to see more of these names, these juniors, show up in my in the Venture newsletter, which is our more aggressive newsletter. And I also recommended Newmont Mining, which is doing very, very fantastic. Caught the bottom of that market. I just love that company tremendously. And I think that stock's going to go a lot higher. Pays a dividend, just the cost of production is under $1,000 an ounce. It's just perfectly fit to really grow in this industry over the next 10 years. So, so great stuff from Amir. And guys, listen, I say this all the time. Podcast about you, not about me. Let me know what you thought. FrankCurzioResearch.com. That's Frank at CurzioResearch.com. Now, let's get to my educational segment. If you haven't guessed it, here comes my Super Bowl prediction. Biggest guarantee ever. And guarantee, I mean, if you do the exact opposite of what I'm going to tell you to do. So bet on the team I think is going to lose, and you'll do fine. I think it's 8 out of 9 years. Again, FrankCurzioResearch.com. You guys could correct me. It might even be longer, maybe like 10 out of 11 years. The only time I've won that I picked this accurately was at Philadelphia Eagles, my team, when I went to the Super Bowl. Every other year I've been wrong. And I am a huge football fan, played fantasy football for over 25 years. The days when you didn't have the internet, you actually had to look or wait for the paper to come out the next day, go to the store, get the paper, and then look at the box scores in the paper to see the stats and how you did against other teams. So, just one of my favorite sports. I love it next to basketball. And I'm going to break it down, let you know. It's going to be really good analysis. I'm going to throw tons of facts at you. For some reason, I always get this wrong. And all I want to do is make you money. So when you do the opposite, it works out. And let's get to it. Because on Sunday, Super Bowl, Chiefs are going to play the 49ers, two best teams in the league. Thought Baltimore was, but I guess not. But it should be a pretty good Super Bowl. Chiefs favored by 1 point, over-unders 54.5. Now, I'm going to get some stats now. So if you're not a football buff, I get it. You can shut the podcast off. I get it. We got a lot of great information so far. But if you're a football buff, listen to this. And you should be, right? Super Bowl's around the corner. It's a Super Bowl. Even if you don't like football, you're going to be watching the Super Bowl. Everybody does. Now, you're looking at the Chiefs led by pretty much the best throwing quarterback in the world right now, Patrick Mahomes. Chiefs covered the spread last 5 games. This included a win against Texas, which they were down 24-0 and didn't blink. And they won 51-31 going away. Also beat the Tennessee Titans. They were down 10-0 and won 35-24, which that score was a lot closer than what it really was. The 49ers covered the spread in 5 games. They were underdogs this year, and they're underdog in this game, getting a point. 2 playoff games. 49ers blew out the Vikings, pretty easy, 27-10. Then blew out the Packers, 37-20. That was another game where that score was actually not as close than what it really was. I mean, it was a blowout. They won in very, very impressive fashion. Now, when I look at the 49ers, ranked as a number 2 rushing team in the league, you got Mostert, who's basically filled in because of injuries. I love to see that the guy was cut by 6 different teams. I believe it's 6. And now, I mean, I don't know if you saw the last game, 200 yards. I think it was 4 TDs against the Packers. It's kind of amazing. It was like the Packers didn't even exist, though. I mean, he was going through holes, wasn't getting touched, just running all over them. It was insane. But, man, I mean, out of nowhere, talk about momentum. So the 49ers also have a pretty good offense with the best tight end in the league, George Kittle. He's a beast. They're one of the best defenses in the entire league, both up front and in coverage. Also have a solid offensive line, great wide receivers who could take it to the house. Deebo Samuel, Emmanuel Sanders, great guys, especially in fantasy. This guy did fantastic for you. And not too many weaknesses on the 49ers. Now I look at the Chiefs. The Chiefs actually have a pretty good defense. They're ranked 7th in points allowed, but they're terrible against the run, which goes into the 49ers' favor. They're ranked 26th, which is insane. The Chiefs' offense reminds me of the Rams with Kurt Warner. I mean, this is a team that could score anytime, immediately, in seconds. I mean, how many teams do you know down 24-0, don't blink, and they were winning by the end of the half? I believe they were winning at the end of the half. It's incredible how fast they could score, how quick it could happen. They have Amazing wide receivers, super, super fast. Hill, Robinson, Hardman, Sammy Watkins also. I mean, Sammy Watkins is a starter on every team. I think he does start for the Chiefs, but he's like their fourth option. And it's just, that's how good they are. One of the best tight ends as well. Travis Kelce is great. And when I break down the stats for this game, which I do every single year, again, and wind up losing, I have the Chiefs winning this game. And here's why. When I look at the 49ers, no question they have a great D. Put a lot of pressure on the quarterback. Makes it easy for the corners to cover anyone, right? When they're getting to the quarterback doesn't have time to throw deep. That helps a lot. But they struggled in every single game this year where they faced a running quarterback. Seattle's Russell Wilson, who won the first matchup, 1 yard away from knocking out San Francisco from the 1st seed to the 5th seed. That was the last game of the year. Arizona. I mean, look when San Francisco played Arizona. And Kyle Murray. They only beat him by 3 points at the Cardinals. They beat him by 10 at San Francisco, but they gave up more than 25 points each time. It's a team that gave up 3 points, 7 points. Just a running quarterback they have problems with. Another running quarterback, Lamar Jackson, ran all over them. And I saw that game. It was pouring rain. You could barely throw. He threw for 100 yards and a TD. But he also ran for over 100 yards and a TD. So he was able to get outside the pocket. He's able to do great against them. Again, it was pouring rain. San Francisco was playing against Jackson running, and they still couldn't stop him. When I look at Mahomes, you look at the last 3-4 games, he's running the ball like crazy. Why the past few games? Because he was hurt midseason, hurt his ankle. Now he's healthy. He's 100%. You've seen him run the amazing play against the Titans when he ran just before halftime. It was a 25-yard scramble, carried 2 guys into the end zone. And he creates fits for defenses. And when I look on the other end with Garoppolo, I'm just not sure if the running game is not working. I think they're going to stack the line a little bit. If it's not working, I'm not sure if he could throw for over 250 yards, 2-3 TDs under this type of pressure. I mean, look what happened to Goff last year against the Pats. I mean, guys are wide open everywhere. This guy wide open in the end zone. That was a very, very close game. Very, very close game. It was still, what was it, 0-0, I think it was, to the fourth quarter, end of the third, when they were driving, and then they got that penalty after they got the first down at the 30-yard line, finally field goal range, and they wound up punting. And it was a very, very close game, but there was guys wide open that Goff was missing. He didn't see them. He was just, the stage was too big for him. And look at him this year. I mean, what a step back. I'm not saying it's going to happen to Jimmy G, but getting back to Garoppolo, 70% of his passes come off the play action pass. It's important to realize that. Okay? So play action passes, I'm going to fake the handoff, and then you go back to show you draw the lineman in and you throw over the top. The Chiefs are one of the best teams against a play action pass this year. So it's important to know. Also, the 49ers on defense, they love playing cover 3. They play cover 3 most of the time. The Chiefs led the NFL by a mile playing against cover 3 defenses. And that's based on EPA. I'm not going to get too technical. Stands for expected points added per play. Just know that that's like same store sales for retailers. Okay, that's the metric they use. It's a standard used to measure basically a team's efficiency. The Chiefs' EPA is 61. To put that in perspective, the Saints, who's second, is 43. They play great against cover 3 defense. They play great. Mahomes lights it up. The real reason I like the Chiefs is because of last year. The heartbreaker against the Pats. Simply because 188 lined up in the neutral zone, which negated the game-ending interception throw by Tom Brady. Instead, they scored. They wound up beating the Chiefs. The game would have been over. Also, they've been down big in the playoffs. They've been tested and never blinked. So there's something to be said of that. His team scores at will on anyone. They're very dangerous. I mean, turnovers could play a major role. Obviously, they always do. The 49ers get a couple. Bosa gets a couple. Yeah, interceptions, whatever. If you get interceptions to the cornerbacks, again, they have great corners. They can change everything. The 49ers do. They have an exceptional defense. But if they don't get to Mahomes, he's going to crush those corners. Even Richard Sherman, who looked really old towards the end of that Green Bay game and was getting burnt pretty bad. He didn't look good. He's great, but it's a lot easier to be a cornerback. If you notice, all the greatest cornerbacks ever, Richard Sherman as well, they've always played on amazing defenses. And Richard Sherman, Seattle's defense, the whole defense was great. It's easy to cover those guys when you're getting pressure on the quarterback. Also, when you look at the spread at one point, it's really based on how the teams recently played in the playoffs. The 49ers blew out their opponents. They beat the Vikings. The Vikings are terrible. They were injured. The top running back was out. Green Bay almost lost to Detroit the last game to lose the number 2 seed. I mean, they were not good the whole year. Even the Eagles went into Green Bay and beat them. Those are 2 teams that are not the quality teams that the Chiefs beat. But if you're looking at the teams, and even if you go past the playoffs, look at 49ers' last 7 games. There's no blowouts. And this is before the playoffs. They beat the Saints by 2, which was a great game at Saints. I get it, but it highlighted how a good offense could score on their defense. The Saints put up 46 points. I can tell you the Chiefs' defense is a lot better than the Saints. Saints' defense is horrible towards the end of the year. They only beat the Rams by 3, the Falcons by a TD, the Seahawks by 5, who was 1 yard away from scoring that winning TD. When I look at the Vikes and Packers, I just don't see those being quality teams that they beat. And you could argue, well, Houston wasn't that great, but they got back J.J. Watt. I mean, they were picked by a lot of people to at least make the championship game at the beginning of the year, and then they got injuries. J.J. Watt came back, was a totally different team. Tennessee was a powerhouse. Great running game, great passing game. Come on. I mean, their offense lit up this year after week 3 or 4 when they changed the quarterback. They decimated the Ravens in the playoffs, killed them at Ravens, who everyone thought was the best team this year. And they annihilated them. And what do you have? KC beating them pretty handily. The final note, I think Andy Reid, he's due. Being an Eagles fan, seen him lose many times. I mean, they made the championship game how many times? Never made the Super Bowl, did make the Super Bowl, lost that 1 year, had the ball in their possession to win the game, and they didn't get it done. That's the difference between Donovan McNabb and Tom Brady. But he has a lot of experience. I love Shanahan. Shanahan was the offensive coordinator for Atlanta Falcons when they lost their Super Bowl, and I thought he did a fantastic job that game. It wasn't his fault. But Andy Reid with Mahomes, with that offense, and a defense that has literally gotten better every game since midseason. And when I compare that against Shanahan and Garoppolo, and again, I know they have a great D and a solid offense. I just don't see how the 49ers can win this game. So my prediction, Chiefs win by 7, 34-27. My favorite prop bets are both the same person. Mecole Hardman, it's a wide receiver. You probably never heard of him unless you follow football. Wide receiver for Kansas City, the fastest guy in the NFL. The under-over for receiving yards is 25. Bet the over. That's only 1 catch for this guy because he's lightning. And also, Mecole Hardman getting a TD. So if you bet $100, you would get paid $325 if he gets a TD. I think he's going to have a very, very big game. He lights out, and it could easily run past those experienced and pretty good corners for San Francisco. So there it is. Sorry if you're not a football fan, but you know I do this every year. And if you're not a football fan, it doesn't matter because all you need to do is take your house and put it on the 49ers, and you're going to have 2 houses, and you can give me one, and we can hang out all the time, and I'll give you great stock picks. Okay, that's what you need to do. Because I'm wrong. No matter what the stats and things that make sense, I'm always wrong with this game. It's fine because my track record is much, much better picking stocks. But when it comes to this, I like to have fun with it, and I love football. I love the Super Bowl, and I know I'm going to get tons of emails when the 49ers are winning by 2 touchdowns at frankcurzioresearch.com, which I always get of people saying, thank you, Frank, you're so terrible, thanks. I hope that happens. I hope you guys make money. But honestly, I really think the Chiefs are going to win this game, and even by 7 or more points. It's just their year. Everything points to their year. It looks really, really good. So, guys, that's it for me. Be sure to enjoy the Super Bowl. Relax. Eat some great food. Watch those entertaining commercials. Enjoy time with the family. And I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.